Good morning. It's John Merrill, Century 21 Miller. This morning I've got Taylor Hallahan of Maple Mortgage Group with me, and we're going to talk a little bit about what we've seen over the last couple of months and what we expect to see going forward. It's certainly an interesting time given COVID-19 and the last couple of months. Certainly, we're not a usual spring market. So I'll get into a bit of my side, but Taylor, what have you guys been seeing the last couple of months?
Yeah, thanks for having me on, John. You know what? In the last couple months, it has been obviously rates have it's been a bit of a roller coaster. Initially, we saw historic lows when the Bank of Canada dropped and did their first rate cut, and then the rates jumped back up as they continued to drop the rate. So a little bit of confusion as to where rates were going. I mean, from our perspective and how we explain this to our customers was the cost of funding was really the biggest factor in why the rates had jumped back up. The mortgage finance companies and the banks all have certain spread and risk that they have to take into account when offering a mortgage rate. So because of COVID being said, it just was an unprecedented scenario that they decided to hedge the rates a little bit, and obviously it was a higher risk scenario, so they had to increase rates, and it caused some confusion because many people were under the impression that the Bank of Canada is dropping rates, why are rates going up? But now it's sort of now that things have resumed in terms of some confidence back in the marketplace, you're starting to see those rates back to those historic lows. Really, right now, you're seeing some phenomenal, 5-year fixed rates. Variable rates are, historically as low as they've ever been, and typically recommending to take those because the spread is much better than what you would get on a 5-year fixed rate right now. So, variable rates being a good spot to park, your customers. They give you the flexibility to lock in at any point in time. And, if you're getting a rate at near 2%, you can't really complain.
Yeah, no, that's crazy low. So yeah, we've seen the last little while be certainly interesting. Normally spring is the busiest time of the year really for real estate, followed closely by the fall. That really changed, and what's strange though is that we were seeing really heated and heavy action right from New Year's, January, February, and the first 2 weeks of March were really busy. In fact, the week that the state of emergency was announced, I had a property that sold that I had listed and sold in Hamilton. We got 11 offers. 3 days later, we're in a state of emergency, and fortunately, it closed. There was no issues, but that kind of activity with 11 offers and whatnot really isn't the norm. It hasn't been the norm since middle of March. In fact, middle of March through April was pretty much a ghost town. If we were allowed to travel, I could have taken off for 6 weeks and not missed a single thing. But the good news, though, was that in May, things picked up, and I think what happened right from early May onward was the fact that when the April numbers came out, there was actually quite a bit of good news in those numbers, even though everything's mostly down. The headlines, if you're reading the papers or online, were all saying things like, real estate sales are tanking and having this negative feel to it. The reality is, they weren't too far off. Yeah, real estate sales were down 60, 70%, depending on which community you're talking about in Southern Ontario. But we also had 60 to 70% drop in new listings for the same communities. So you take Hamilton, for example, I think it was 58, 60% drop in sales. It was also down 58%, the exact same percentage in new listings. So your supply and demand stayed relatively balanced. And as long as supply and demand is in check, the pricing doesn't change very much. So that was the good news, was that people didn't really see a big pullback in pricing. Most communities around Southern Ontario got, month over month, April versus March, we were looking at maybe 1 to 4%, depending on which community you were looking at. Oakville was down only 1 point from, in April in May compared to April. So, and when you looked at the year-over-year figures, which we often, is an excellent measure, you might have been down 2 points month over month, but you were still up like 8 points year-over-year. So here you are in a pandemic, and you're still getting an 8% return if you had to sell, compared to the same time last year. So that was really good news. And so I think, as we got information like that, combined with, the weather improving, the normal kind of things that people like to get out and look and be outside and start thinking about getting their house ready for the market, we saw more improvement. Businesses started to slow, or, at least we were getting news of businesses maybe starting to open slowly. And so when that happens, we get an increase in consumer confidence. And, those measures, in a past career, I used to analyze that stuff all the time for, going 10 years ago for clients when I was in the travel business and travel insurance. But, when we were looking at those numbers, like that was a measure of kind of consumers' willingness to make big ticket purchases. So whether in that case it was a trip or somebody wanted to buy a car or a house. And without healthy consumer confidence, those kinds of things didn't happen. And so, it was evident to me because we started getting really busy from about the first week of May onward. I've been real busy, written a number of offers. We had a listing go live. I've got another one coming up, and I don't remember a day in the last 2 weeks where I haven't been out showing houses. And so it's gotten pretty busy, and I think that's a sign that consumer confidence is returning. So, I'd like to think you're seeing the same thing. I guess more people getting ready with mortgage applications and getting organized to make that move if they haven't already.
Yeah, you know what? It's funny. I mean, for us, yes, volume did slow down throughout that period, end of March, April, but we were seeing a large influx in pre-approval applications. So people took that time to really do their homework, to find out what their affordability was, but that also really learn the process. So what they're going to need to do in terms of, setting aside for closing costs and just really doing more research before, going out and shopping, which is obviously the fun part of it. But, it is important to go through the pre-approval process. And as you and I were discussing, it's very beneficial in scenarios where maybe there is a multiple offer situation where you've got the having, a pre-approval in your back pocket that's strong. I mean, the difference between just into a bank and, having them sort of run the numbers through a system and someone actually looking at your income documents and doing a full credit qualification is a big difference. And that's the kind of surprise you don't want at the end, but if at the beginning, and that's what we do for our customers, it gives you a lot of confidence going into those scenarios where maybe that purchase price needs to go up a little bit and ratios are going to get tight and you really want the property and you got to remove that condition of financing. So again, something we don't, obviously we don't recommend, but we get it.
Of course.
It's a competitive world out there. So
yeah, no, you always want to be protected with conditions, and so obviously it's best to have them. But there will be, as you pointed out, times when maybe you got to fine tune the offer, or you're asked to take it out by the other party because it means you might not win. And those are decisions that only they can make. But having gone through the process of understanding their finances beforehand with you, they're probably ideally going to be better equipped to make that decision. And on that note, we are seeing a lot more multiple offers. I've just in the last few weeks, I've done a number of offers for clients. Some have been accepted, some haven't. But just in the last two weeks, 3 of them in competition, and so the multiple offer scenario is coming back. It seems we've got a lot more activity out there. We just got the May numbers, and so I'll give you a couple examples. But like locally, Hamilton and Burlington. If we look at Burlington, average sale price for May was $834,000, almost $835,000, which was up 3.1% compared to April. So modest increase there. I think the good news is just that the number was up. It doesn't really matter whether it was 3% or 5%. It's only 1 month we're looking at. So, but to see that trajectory go up is nice. But year over year, Burlington 12.1% up over last year. That's huge.
That's great.
And here we are in a pandemic still. But the other numbers are important too. And when we talk about number of new listings, number of sales, we're still well off what we would normally see for this time of year. The number of new listings, for example, in Burlington was only about half, 51% actually, of what we would normally see at this time of year. So half of what we had to last May 2019. Number of sales, same thing, 52%. So, your supply and demand still pretty balanced there. We're down on both about half of where we would normally be. But again, as long as those two things are in balance, we aren't seeing a lot of change in pricing. The demand seems to be increasing a bit though, because as I said, consumer confidence is up, and we've got people coming out shopping again. It's getting real busy. Hamilton, same kind of story. If I look at the whole region, just so we have a good sample size, so that'll include Waterdown, Dundas, Stony Creek, all of Hamilton. 600 just under 605,000 as an average sale price. That's up just under 10% year over year, 9.8. Month over month, actually, Hamilton pulled back a little bit more than Burlington did in April. So month over month, we're right back up to pre-COVID levels. We actually grew 8%, over 8% in May compared to April. But same story with new listings, number of sales, both off about half, 50% drop in new listings compared to what we had last May, and 60% of the sales that we had last May. So it's I think it's still, everything's still in balance. So as long as we've got that balance, I think we're looking all right for the short term. The message I'm giving to my clients, the buyers, is and I have been over the last couple months, is kind of what you just talked about. Get ready, get organized, get your financials, documents submitted, get the applications together, do what you got to do to be ready, because there's going to be a time when you want to pull the trigger, and you may not have as much competition as you had pre-COVID. I mentioned just now that I've done, and I found myself in competition a few times, but it's not, I'm not up against 14 other offers. It's 1, 2, 3 offers that I'm dealing with as competition. So, at the end of the day, whether there's 17 offers or 2 offers, you could still win, you can still lose. You're going up against somebody else. But the good news I'm finding right now is so far we're not really at that pre-COVID level where you saw 10, 12, 15 offers on a property, unless they priced it to encourage that. But that doesn't seem to be the norm. But I'm kind of wondering what your thoughts are going forward. How do you see things over the next couple of months through the summer and maybe into the fall?
Yeah, you know what, and you alluded to it earlier with regards to the this listings being down and number of sales being down, but the prices are still up, and there is that strength in demand, and I think there's also the strength in supply. There are people that are really just waiting to list their property. So, the chief economist for Scotiabank, he's come out and said that really the real estate market is, from their perspective, off. They expect that, once there is a loosening up of sort of go outside and view properties, and the consumer confidence returns and businesses slowly open, that the real estate market will get right back to where it was sort of pre-COVID, slowly and gradually, but it is expected that, the demand and the supply will return to the levels that they were at before. They're just so waiting waiting to sort of be told that it's okay to go out and do that, right? And I think that's where, like you mentioned, you're seeing more customers, especially since May, that have reached out to you, and now you're doing showings pretty regularly. So
yeah, I just since we've been on this call, actually, I saw a text message come through. Somebody wants to see a house later today. So this will be, I don't know, I've lost track of how many days in a row I've been showing houses, not all successfully, but it's a process. They don't always get the one they want. And it takes seeing a number of them to get to find the right one. But, I was on a Zoom, or I don't know if it was Zoom, but it was a webinar last week in which the senior economist from RBC was speaking. And his story, he was sharing was kind of the same as what you heard from Scotiabank, in that, they're seeing an increase in applications. They're seeing an increase in activity that kind of mirrors what I'm seeing out in the field. And, so they're pretty optimistic about the short term. They are, nobody's got a crystal ball, including them. So you don't know what's going to happen. I mean, we do have a little bit higher than normal unemployment at the moment because of COVID. Hopefully that'll, those numbers will drop over the next few months. It's possible, though, I suppose, that if unemployment didn't come down, by the time that the CERB benefits end and mortgage deferrals end, that perhaps, there might be a little bit of a softening in demand. You got to remember, Canada also lets in a lot of newcomers every year, which is great for our tax base and for real estate. It's also a portion of our demand is newcomers to the country. So, if obviously during COVID, nobody's immigrating because the borders are closed. But, it'd be interesting to see if we return to same kind of immigration levels afterwards, because that'll also help our demand. I could see theoretically that if all of those things aligned in a manner that wasn't so positive, we would see a softening in the market later this year. And I think and I've talked to a lot of sellers who are saying, are expressing their thoughts I guess what's the best way to put it? They're looking down and kind of wondering and guessing, would that happen? Could that happen? And thinking that, what, it's hot right now, probably now is the best time to be listing a property. And I don't disagree. I mean, all of those things, we could be wrong on all of those things, and the fall market's just as hot as it is today. But we don't know that. That's still in the future. What we do know is right now, buyers are coming back and the numbers are going up. So if you're thinking about selling, I'd say, freshen up, touch up those marks in the paint and get it up.
Yeah, and you know what? It's funny because it's kind of the perfect time to do it when you're at home and you know, those little jobs that you never had time to get to is the perfect time to maybe watch a do-it-yourself video and learn how to touch these things up or get things ready in preparation for listing a property shortly.
Yeah, absolutely. And one of the things as far as listings go, we were talking earlier about how, when COVID first hit, there was that idea of, doing everything virtually. And we can, literally, start to finish. You can buy the house without even stepping foot in it. Most people still want to, see the property. So obviously the showings we're doing are conducted safely, masks and gloves and sanitizer and all that kind of stuff, and doing our best to social distance. But people still want to see the properties. And so you still got to get out there. But, in terms of marketing the property, one thing that we're really seeing a lot more of is virtual tours. And when I say virtual tour, I mean the 3D Matterport style virtual tours where it's almost like you're in the house, like you're clicking and moving through the property in each room, and the definition is set so high that if there was a smudge on the paint, you're going to see it. If there was a scratch on something, chances are you're going to see it. The scratch in the hardwood, for example. So it's almost like you're there. And that doesn't necessarily mean that somebody's going to move forward with an offer without having seen it in person, but it helps weed out the people that maybe, may not have been interested. So the reality is the showings that you do get are the ones that are actually, maybe a bit more serious about it. And so I think that's a good thing. And I think the way we market properties going forward after COVID-19 is likely going to embrace a lot of the things that we've had to learn during COVID. And so sellers, I think, are much more better, in a better spot because, the marketing has been elevated to a new level that maybe hadn't always been utilized in the past.
Absolutely. And we see that on our end as well, just from a financing perspective. Most of the lenders have now made it very easy for you they'll accept, e-signatures. DocuSign is huge now. We can do everything by email and phone and facilitate an entire transaction that way. Even video calls. I mean, it's to see the face of the person you're working with.
It's pretty amazing that, the funny thing is all of this technology was there before COVID. We just didn't integrate it all together in one process. So, it's I think a lot of people have learned a lot of things through this. And when it comes to business, how can we conduct business in a more efficient way? How can we, how can we market to our clients more effectively or in potential new clients? And I think we're coming out ahead of this better than we were. And I think that's good news for all of those people that we serve, whether it's my clients buying or selling a home or yours financing it, or any business for that matter. I mean, everybody's had to get more creative.
Yeah, and it's it's I think been a learning process for us in figuring out what works and what really is not necessary, right? And getting rid of some of the systems that are just they're a little antiquated and making things easier. And it is all customer focused, making it easier for the customer.
Yeah.
So
I agree. I think everybody's coming out of this better. And I think that'll ultimately help, guys like you and I be more successful in what we do. So I'm hopeful that we don't forget what we've learned during this time, and we keep doing the things that made us successful and got us through this period as we move forward. So anyway, unless there's anything else you wanted to share, Taylor, I think that covers off what I wanted to chat about today.
Yeah, no, I really appreciate you having me on, and I'm glad we could cover some. I'm sure that, in 3 months from now, we'll have to review and see whether or not your crystal ball was right.
Yeah, I think that's a great idea. I'm really curious. It's funny. Every month I'm always curious to see what the numbers are going to look like at the end of the month. But I've never been more curious about that now. So I'm constantly running searches and running stats and trying to evaluate the information we have. So, we just started June. It's the 4th, and I already can't wait to see what the June numbers are going to look like. So it's going to be interesting. Anyway, thanks for your time today. I really appreciate it, and I'm sure we'll talk soon.
Sounds good. Thanks, John.
All right.